Ladies and gentlemen, good day, good evening, good morning, good afternoon. My name is Thomas and I'm happy to conduct the following webinar for you. So get yourselves comfortable and let's study some markets. How is everyone doing today, and how are your trading successes, trading progresses so far? Do you have some stories to share? That would be great to hear from everyone, because we are here trying to exchange ideas, opinions, etc., and so on and so forth. So if you have something to say, if you have something to share among your fellow colleagues, fellow traders, I will be very, 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 very happy to hear that. So feel free to share your opinions, your thoughts. That's highly anticipated, highly welcome. So some stories that are quite important. That's of course China-US talks. Last week, Bill Gates, the founder of Microsoft, and this third or fourth most richest person in the world, visited China, and the Chinese president Xi Jinping, he called him his old friend. So that's something interesting. And also you have to take into consideration that both Xi Jinping, who just turned 70, and Bill Gates, well, they are probably the same age. Bill Gates is probably like 68 or something. So they had a lot of interesting talks, and that's kind of like the defining moment here, probably for the next month or so, at least for the next few weeks, because basically, you have a lot at stake, a lot on the table. So you have supply chains, you have Taiwan question, which is quite, well, definitely very important and very is playing a significant role between the US and China relationships. And next, it's of course, yes, these supply chains, which might be disrupted in case of like any sort of conflict whatsoever. So that's a very, very interesting topic, and the outcome of these talks are gonna define the upcoming months and weeks and months to come. So and then following that, following this visit and Bill Gates' visit, Goldman cuts China growth forecasts. So that's quite important because basically China is currently number 2 oil consumer in the world, and I would say in many aspects China is number 1 in terms of consuming and producing real goods. Not so much, of course, in the digital economy, because the digital economy in the world is dominated, of course, heavily by the United States companies. But when it comes to real production, China is probably number 1 there. So yeah, these are the most important things. So a little bit about oil. So oil slips handing some back of last week's gains, but we'll see. I don't think that's a big loss. That's no matter how journalists usually write about that. So here is Brent, and we can see that it's still trading at $76 per barrel, higher than any point of last week. So that thing that we have just read is basically highly exaggerated from the journalist's perspective. And at the same time, we can definitely see that oil is still remains to be trading inside this pretty significant, pretty long. So when it originated, almost 2 months ago, though. So this channel, this corridor, so after the 77.5 level got broken from top downwards, like here, and then ever since then, oil has been sitting in this narrow range between 72, 78, and here it is. Here it is currently, 77 dollars per barrel, and like probably here 2 weeks ago I was more bullish on oil. I was like, yeah, oil is definitely going to break out because the US driving season has just started and so on and so forth. So there were many things, many fundamental factors in favor of oil prices going up. But eventually, oil price couldn't break above this level, and instead it rolled down towards the 70, the lower border, and then it bounced off quickly. So one important thing that that helped that was of course this the another drop, another 2 million drop in strategic petroleum reserve of the United States, which is still quite significant, and it doesn't diminish in a very quick manner. And from the original plan that was announced in March about additional 26 million barrels to be released from that reserve. So that is 371 minus 26. That gives us 345 million. So we are almost here at the bottom of this additional exhaustion. And now the strategic question that we have to answer is basically what happens next. So after these the SPR get drained down to 345 million, and it's basically going to be something like half of what was there available 2 years back, what's left. And at that point, that would be a decisive moment, and when they're gonna basically say like, yeah, what's going next? What's gonna happen next? Right? So 345, and what about oil prices? And then the next question is, so when will it be? When will the time come to replenish these strategic petroleum reserves? Because it's not something that it's basically, it was meant basically for a rainy day. Now this rainy day has come, but what's next? So look, you never want to be left without these strategic petroleum reserves. You never want to stop your economy. All right, so that's quite important. All right, so yeah, that basically influences oil prices a lot, and that basically doesn't allow them to drop any further than 71 or 72, because then once the prices drop even below that, then the US authorities will start purchasing oil and trying to replenish these SPR. But eventually that's going to lead to again oil prices going up. So it's kind of like this vicious circle, right? So oil prices go up, like everyone says, okay, China's going to be fine, no worries, no crisis coming, and so on and so forth. And then everyone says, oh, okay, at this with these oil prices, we cannot produce a lot, and then it's another recession. It's a new danger of recession, and then the prices drop, and then prices go up again, then prices drop, and then prices go up again. So it's kind of like this endless roller coaster for the last almost 2 months. So a question from Achai here, is OLYMP TRADE also a liquidity provider, or you guys work with another firm? Yes, of course, we work with not just one, but a few liquidity providers, and that's quite a standard for any financial company, for any broker, or I would say like any company related to fintech industry, is because you always want to have an additional channel or additional source of liquidity. Yeah, like you never want to be left with only one supplier, one source. You always want to have backups. So it's like backup after backup after backup, and so on and so forth. So backup after backup after backup. So that's how you want to handle it. Okay. Where were you? We missed you, Thomas. Well, I was there. I've always been here, just doing my webinars on Monday, and then my colleagues Kanak, Himanshu, and Pavan, and many others. Karmit, I think, they do webinars, the trading seminars. All right, guys, are there any questions at this point about trading ideas that you want to discuss? I will be very happy to answer them. Now, let me just remove public, we don't need it, and also probably the MACD. Now we have the plain chart. And oh yeah, there is another question. Hello, sir. Is OLYMP TRADE works as a broker in MetaTrader 5? Kindly, I want to you inform. If anyone has same doubt, let him know. We don't have this platform available for trading. All Forex trading basically happens within our own platform. Like, it doesn't really get so you have to understand that basically you can use MT4, you can use MT5, or you can use OLYMP TRADE platform, and you can use many other trading platforms in order to basically to trade, right? So it doesn't matter which it's kind of like a metaphor. It doesn't matter which car you drive. If you want to get from point A to point B, you can drive a Mercedes, you can drive a Toyota, you can drive whatever. So it's the platform is basically the same. It is your car to get to the basically the heart of trading, right, where the actual trade trades take place, right? So you want to get there, but it doesn't matter how you get there. Like, of course, you have MT4, it looks a little different, so it kind of like it's a different design. Sometimes you can use a desktop-based application, sometimes it's a browser-based application, and sometimes it's like a mobile application. So you have different, just they vary in shape and color, but the essence remains the same, right? It doesn't really change. Well, now the Euro USD question, right? So I also looked this chart today, and I prepared to open a trade. So basically, what we can observe here is we had this. So let me do some Forex analysis for you. So this is how I usually look at charts. So since I know the history, since I monitor this currency pair almost every day, I pretty much know the history. I know that last year, 2020, well, even before 2021, 22, before the conflict in Ukraine, the euro it already had been dropping. And then in 2022, because of the conflict, because of the natural gas crisis, and so on and so forth, so many factors that sort of kicked in all together, all at once, the euro like dropped below the parity level, right? So at first it bounced off of the parity level, and then it dropped and it stayed below for almost 2 months, right? It was end of September, end of August, and only in that was more than 2 months. Like basically, only in November the euro managed to gain some of its losses, some of its previous losses. Now, a major factor to that was that Europe was so lucky to have had a very warm fall, and subsequent winter was also warmer than the norm, and that basically saved Europe. Pretty much, it saved the European economy, because the European politicians and economists, they say, not so much economists, but the politicians, they said, okay, if we have to choose between our industry and between heating our homes, we prefer heating our homes instead of saving our industry. And that was it's a very difficult question to answer, and I don't even try to to take any positions there, to take side there. Now and then, after everyone realized that things weren't as bad as everyone had predicted, they would be, and then oil prices started. The euro started recovering, and eventually it reached the 1.10 level, which of course is another strategic level. And here you can see it goes from like 1.095, 1.05, 1.10, back to 1.05, 1.10. Okay, didn't drop to 1.05. Now it's trading at 1.09, and basically there is another technical issue to that, or technical aspect. So when we go here and I want to apply a line, yes. So we saw we had this. Okay, let me do another one so that you can really see this downwards channel. So there was a downwards channel, there was a breakout, and then there was the so-called retest. Okay, so role reversal pattern. So we had a a resistance level, which after being broken down, been broken, it turned into a support level. Okay, and from here the euro gained enough of the momentum, and then it jumped almost 3%, maybe even more, and now it's trading here at 1.09. So basically, I feel that even if we apply the RSI indicator, we are going to clearly see that we are overbought on the RSI. Here we are trading here, we were trading here above the 70 level, and that is a moment when we can try to actually gain some profits by so hoping that the price would drop a little bit towards 1.0 something, 0.5, or maybe even a little bit above that. So still we have enough of the potential, probably 1.08. So that would be a nice probably 200. Okay, maybe I'm being a little bit greedy with my take profit. It should be somewhere around here, but there is potential here. Okay. So yeah, the question here is Euro USD down. Shall I open a Forex trade downwards? Just yes. My view here, and once again, I have to tell you that I only have probably less than 50% profitable trades, but since I have the correct risk to reward ratio, I managed to stay profitable in the long run. In the long perspective, like on the monthly basis, on the yearly basis, on the I know, maybe the decades, my first decade of trading has passed, so I closed it with profits. That's very important. Now, your screen is not clear. Guys, if my screen is not clear, please refresh it. It's in the like right-hand corner downward on the somewhere below, somewhere on the bottom of the YouTube window, so you can refresh it. The question here, an interesting one, Mr. Thomas. What can you say about trading too much, which leads to losses? Yes, that is a very, very common thing, and I I sort of went through it again. I'll tell you one example. So I think it was 2012, 13, somewhere that, maybe 11, and basically at some point of time, probably it was it didn't last didn't last too long, but still it lasted for maybe 1 or 2 months, definitely. When I traded, like in the morning, I was trading on one exchange, and then after, like, at probably 3, 4, or no, probably closer like to 3 p.m. I would go to the office and I would start doing analysis, and then I would start trading the American stocks, the NYSE, the New York Stock Exchange stocks, and eventually that basically means that I was spending somewhere around 14 hours in front of, glued to my screen, and I was like trading too much. And I cannot tell you exactly how many like months or weeks that lasted, but definitely if I combine all those separate days and so on and so forth, so that would probably mean that somewhere around probably like 2-3 months, definitely I was trading this in this, and basically, yeah, my social life dropped to zero. I was only talking to guys at work, and even then my job was pretty solitary, right? So we just basically had to analyze charts and open trades. So that is not a healthy way. And luckily at some point I was like, oh, I realized I sighed out and I was like, what is going on? Okay, so guys, this is something that I mentioned, and I want to add, in addition to that, moreover, every weekend, me and my fellow colleagues, my friends, we would stay in the office, we would play, we would analyze charts, and then we would play Counter-Strike for a few hours. So that was basically my schedule for a few months, and I should say it's not healthy. Okay, you never want to do that because you'll get yourself exhausted, too much exhausted. Now, at the same time, trading for 3-4 hours per day, I would say it's fine. It's totally fine, especially if you do active day-to-day, if you do active intraday trades. That is all right, in my opinion. I don't see nothing wrong about that. So yeah, guys, feel free to. I think it's okay. Yeah, if you trade like that, it's all right, in my opinion. All right. A few more questions. So yeah, I answered about MT4. Brand Forex 1-day time frame signal, please. Yeah, I think I've answered that. I see that. Okay, so on daily time frame. Well, guys, now I think that Brand has a little bit more kind of like momentum for an up trade, given all the fundamental factors. But it's difficult to say. It's just, I don't know. According to my rules of trading, I never open trades inside such a corridor, right? So we have this corridor, which is from 71.5 to 78, somewhere like that. And I never want to open trades here because it's just not the right thing to do. Like, you never want to open trades inside any like range. You want to be opening like down trades here or up trades here at the bottom or at the upper border, or maybe you want to wait for a breakout, and after that breakout happens, you want to maybe join the movement and actually like open trades, keep opening trades. But you never want to be opening trades inside of the channel like this one. Now let me show you an example here. Something like this, a similar example on Bitcoin, right? Okay, maybe it's not the perfect one, but kind of, right? Here, while Bitcoin was trading here, it's sort of difficult to say. Shall I go? Because many people were short in Bitcoin, right? Many people were opening up trades, and those who were opening up trades, okay, they were right. But if you have an intention of doing some quick trades, like up-down trades for a short period of time, like if you want to do trading, so it's not really a good thing. So it depends on your time frame, right? If we were to look at Bitcoin from a weekly perspective, that's a different story, right? So it definitely looks like kind of like this double bottomish pattern, like, or there is also a term called fortress. So this pattern looks like fortress. It's a classic one. It's in all the books, in all the trading books. So, but the right thing to do here would be to open a trade once this breakout starts happening, and then of course there are some rules how you distinguish a real breakout from a fake breakout, but that's kind of like a different story. All right, so there was a question. Here. What is your full name? Well, my name is Thomas. That's my full name. Gold. Okay, so gold. Oh yeah, guys, by the way, one little update here. As you can see, we have more currencies in Forex now. Wow. So some of you who want to be more, who just want to have more more of a flexibility, more trading ideas like this. Yeah, Cardano, why are you dropping so much? Cardano is now like close to zero. Polkadot. So all these currency pairs, they're here. Wow, Ethereum. Oh yeah, Ethereum is our old friend. Ripple. Finally, we have Ripple. I have to apologize for these like broken charts. Soon they're gonna add this data. It's just a break between the quotes here. Yes, for example, why some cryptocurrencies are interesting? Because they are volatile, right? And now since we added, should be somewhere around 25 of them. Should be somewhere around 25 of them, new cryptocurrencies. And as you can see, they basically, they go from like 0.2 to 0.3. So from 20 cents per token up to 30 cents per token within just a few days, like 1 to 3 days. And that's, they have a lot of potential. So many people don't like trading Bitcoin because Bitcoin is just not volatile, and so on and so forth. But still, you can have some potential, right? But with multiplier 10, like basically it has to, it's pretty slow. So that's why we have like Bitcoin Cash, because if it just goes up at some point of time, then your investments, they gonna like double like very quickly from 106 to 125, and that would be close to 200% profits, and that can happen quite soon. Okay, so yeah, AVAX, Avalanche, guys, there are many cryptocurrencies to trade now, and if you do some analysis, you will be able to catch some very interesting ones. Okay, the next question, I guess it will be downtrend in commodity composite index in 4-hour time frame. All right, let's have a quick look at commodity composite index and 4-hour time frame. Well, what I see here is I can clearly see the so-called head and shoulders pattern, because as you can see, we went up from I want to say 0.5 to 0.6. So the 5th of June the 5th, and we went from this price and all the way up to this price, and we saw this. We can now see this left shoulder, right shoulder, and this headline, and now we are dropping. I see that there is this there's this support level here, okay, but it's kind of so close. So yeah, I would say like, the general sentiment would be to open a down trade in the continuation of a trend, but I don't really see. I see that there might be some resistance here, some support. So if opening a downwards trade, I would just do it cautiously. Just open trades with caution. So another question here. I'm using this for first time. I'm trying to learn how to trade. Well, that's a great place to be. And my probably my piece of advice, my recommendation here would be to definitely not to spend, not to have too high expectations during the first weeks of trading. And basically, there is this old saying that within your first, weeks of trading or first months of trading, your goal is not to make $1 million and then sort of fly to the Caribbean and enjoy life under the palm trees and the white sands beaches. But it's more about learning how to not have losses and how to basically learn the ropes. It's like your boot camp, right? So consider your first 2 weeks in trading as your trading bootcamp. And thanks to our company and thanks to, well, probably many other educators on YouTube, now I remember myself and I put myself in your shoes. And I think that if only I had all this amount of information back in 2000, whatever, I started in 2010 or 2011 when I started trading seriously, I would probably be almost as rich as Elon Musk at this point, had I had all this information online. Now, the problem is, another problem that many people face is what probably was shown in the one of the first blockbusters by Keanu Reeves, the movie called Johnny Mnemonic. If anyone remembers that movie from the 90s, basically it's called information overload. And they were talking about that in the 90s, right? Yeah, that's the huge problem, how to weed out all the useful information from the correct one. So my piece of advice here would be to take everything with a with a grain of salt. Just consider that everything. Consider that most of trading advice out there on YouTube or on the internet in general is good, but stay vigilant, stay cautious, and just don't take everything for granted, and sort of put everything into practice. And luckily you have a demo account and you can switch to demo account at any time you want, or just basically one thing that I showed you many times is that you can allocate your money into different accounts, different sub accounts. You can go to demo account, you can practice there, which I'm quite alright with trading demo account, but at the same time I always advise not to spend too much time on demo account, because then your trading psychology just sort of goes out of the window, because it's not really what actually happens on the markets. Because when you trade on the market, that then in fact it's just like so different, right? With trading on demo account, you just totally ignore, you just don't have trading fear. But when you risk your own money, then fear kicks in, and that's a difficult one, right? When you're afraid to place a trade, and when you know that your future well-being depends on your success or not success in trading. So yeah. All right. So yeah, just don't set the bottom line here is, don't set unrealistic goals for yourself. Just put yourself, tell yourself that your goal within the first few months or weeks of trading is to just learn how to trade, and that's it. You don't need to be in a rush. You don't have to be like, oh yeah, I need to make money, blah blah blah. Just be relaxed, be as relaxed as possible, and learn as much as you can. Always analyze your trades. The markets, just don't chase the markets. Never chase the markets, never chase trades, never chase a stock. These are the very common rules of success in trading. Like, you never want to be chasing anything, right? So yeah, guys, I guess that's it for today, unless I have more questions in the chat. Let me check that. And here, yeah, definitely a few final thoughts here on commodity composite index is, of course, you have this. So yeah, this trend line. All right, like this, up, down, up, and down, up and down. So it always goes like this. Well, guys, I think that's it for today. I don't see any more questions in the chat. So if you are watching this webinar for the first time, just set yourself a goal, maybe and set some actual deadline. So something, yeah, just set yourself a goal that by the end, by by the middle of August, you wanna learn pretty much all the necessary content in terms of psychology, in terms of money management, and in terms of strategies. And then from September, you will be making profits. Something like this sounds like a realistic goal. It's like we spend 4, 5, 6, sometimes 7 or 8 years at university learning, how to learn a profession. So learning an occupation. So trading is very similar in that sense. Yeah, like you always wanna spend some time, because like imagine you want to be a surgeon. No one's gonna let you do a surgical operation after you've spent 1 week watching about operations, about surgeries, right? So and that's the same thing with trading. We sometimes exaggerate our our chances of winning in this game, and after having spent maybe 1 week, 2 weeks reading the materials, and we decide, okay, now it's time for serious game, time for serious money, and we invest too much money in trading. So that's something not to do. It's kind of like bad advice, but the correct course of action would be to actually learn, practice, and only after that increase your amounts exposed. I mean, like your buying power, your like balance, your trading balance, and start trading bigger once you've learned how to trade, and you can more or less do it stably for a long time. All right, guys. Now this is it from my end. I thank you all so much for your attention, and I wish you a wonderful trading week and wonderful profits. Thank you very much, and I will see you soon. Bye bye.